Lately, there's just been so much chatter, right? A
Uh,
real flurry of news, especially with big tech companies. All the earnings coming out.
yeah, it's that time again. Lots happening.
Exactly. And, well, one name that keeps popping up, sometimes good news, sometimes maybe less so, is Spotify.
Spotify, yeah.
Yeah.
Symbol SPOT. Very
Mhm.
much in the headlines.
Right. So today we're doing a deep dive. We're going to cover what you need to know about Spotify Technology S.A.
Exactly. And we've really dug into the details for this one.
Okay. What are we working with?
We've got a comprehensive stock analysis report, their Q2 2025 report, plus the latest earnings call transcript. So the raw
Your
material,
primary sources. Good.
right. And the goal here isn't just to, read off the numbers. It's about understanding why things happened, what really matters behind those headlines.
Getting the real story.
The full nuanced picture, yeah.
So our mission today really is to cut through all that noise.
hmm
Let's, peel back the layers on what Spotify's been doing lately, figure out what's just a short-term thing, maybe a wobble,
Right, a blip, maybe.
and what's part of their bigger long-term strategy.
Separating the signal from the noise, essentially.
Exactly. So whether you're an investor watching SPOT, maybe a tech enthusiast just curious about where digital audio is heading.
Or maybe you just want to understand how these massive platforms actually operate and grow.
Yeah. Then this deep dive is definitely for you.
hmm
Okay, let's get into it then. Those Q2 2025 earnings from July 29th. The headlines were pretty stark, weren't they? Surprise quarterly loss, revenue miss.
They were, yeah. And the stock reaction reflected that. Closed down 11.55% that day at $620.01.
Ouch. So on the surface, it looks concerning.
It does, but that's why peeling back the layers is so fascinating here.
Right.
Okay, so yes, they reported that surprise loss and they missed on revenue estimates. But management gave some pretty specific reasons why.
Like what?
Well, first off, significant foreign exchange headwinds.
Right.
Basically, currency fluctuations hurting their numbers.
Ah, the strong euro or weak dollar, that kind of thing.
Exactly. And they put a number on it and they expect a $200 million negative impact just from FX on their Q3 guidance alone.
200 million. Wow, that's substantial. And that's external, not really about their core business performance.
Precisely. It's outside their operational control. And there was another hit too.
Okay.
Their Q2 operating income took a $98 million hit from higher social charges.
Social charges, what are those exactly?
Think employer taxes, mandatory benefits contributions,
Mm.
often linked to things like stock price appreciation in some regions, particularly Europe. Again, they explicitly said these are outside our control.
So not a sign of them spending inefficiently or the business slowing down fundamentally?
Not according to them. They frame these as temporary external pressures. Important context missing from just the headline loss figure.
But here's where it gets really interesting, maybe even a bit counterintuitive given those financials.
Right.
The user growth. Despite the financial misses, Spotify seemed to knock it out of the park operationally.
They really did.
Yeah.
This is the other side of the coin. Monthly active users, MAUs, hit 696 million.
696 million, that's huge.
It is. And it beat their own guidance by 7 million users.
Okay. And what about paying subscribers?
Also strong. Premium subscribers grew by 8 million in the quarter, reaching 276 million.
And how did that compare to expectations?
That was 3 million ahead of their guidance.
So more people signing up and paying than even they expected.
Exactly.
Mhm.
Which just underscores their continued dominance, right?
Yeah.
They still hold something like 45% of the music streaming market outside China and Russia,
45%.
and host maybe 65% of all global audio music streams. So even with those financial headwinds, the core platform appeal, the user magnet, is clearly still incredibly powerful.
That user growth is really something. And it ties into this idea you hear about Spotify having a wide economic moat. Can you unpack that for us? What does it actually mean in practice?
Sure, a wide economic moat, it's like a cantle having a wide ditch around it. It's a way to describe strong, sustainable competitive advantages that protect a company's profits from competitors.
Okay, so what makes Spotify's moat so wide?
Primarily, it's that massive scale we just talked about,
Yeah.
nearly 700 million users,
Hmm.
and the powerful network effects that come with it.
Network effects, meaning the more users they have, the better the service gets, which attracts more users.
Exactly. More users attract more artists, more podcasters, more content creators generally. That richer content library attracts even more users. It's a self-reinforcing cycle.
A virtuous cycle.
Right. And it makes it incredibly difficult, maybe even uneconomical for anyone else, even big players like Apple or Amazon, to really challenge them head-on at that scale.
Plus, that scale must give them leverage with music labels.
Huge leverage in negotiating licensing deals. Much better terms than smaller players could get. It's a fundamental long-term advantage baked into their size.
And it sounds like they're not just sitting back and relying on that scale, they're pushing hard on innovation, particularly with generative AI.
Oh, absolutely. They're investing heavily there.
We hear about things like the AI DJ. How is that more than just a fancy playlist? What's the actual user experience like?
Well, the uptake suggests it's resonating. Streams are up nearly 45% on AI DJ sessions, and it's in over 60 markets now.
Okay.
And it's not just shuffle. You can actually have a dialogue with it, ask for specific things using natural language, even complex stuff like, play upbeat indie music from the early 2000s that sounds like The Strokes.
Wow. Okay. That's pretty sophisticated.
It is. And then there's the AI playlist feature, now in over 40 new markets. You can just type in plain English what you want. A workout playlist for running or chill background music for studying, and it builds it.
So it's making discovery and curation much easier, more intuitive.
Exactly. And they talk about this not just as adding features, but as a foundational retooling of their whole tech stack for this generative AI era, aiming for a truly conversational, personalized audio experience.
You mentioned personalization. How does this AI investment create what the analysis calls a deeper personalization moat?
Right. This connects back to the network effect, but supercharged by AI.
Yeah.
Because Spotify has so much engagement, so many users listening for hours.
All that data.
All that data feeds their AI models. And they believe these new generative models improve, quote, infinitely faster as more data and usage gets added.
Infinitely faster. What does that really mean in practice?
It means the personalization gets better, faster than competitors can likely match. The recommendations become incredibly tailored. The AI understands your context, your mood.
Making the experience stickier, harder to leave.
Precisely. The AI learns you so well that the personalized experience itself becomes a major reason to stay. It deepens that moat beyond just the content library. It's a powerful feedback loop.
And it's not just AI, they're also broadening the content itself, right? This multi-format approach.
Yes, very strategically. They're moving well beyond just music.
What are the big areas?
Video is one. Video consumption on Spotify is apparently growing 20 times faster than audio only since 2024.
20 times, mostly video podcasts.
Seems like it. Over 350 million users are streaming video podcasts now. That's a huge audience engaging visually on an audio platform.
Interesting. What else?
Audiobooks. They've rolled out an audiobook add-on subscription in 13 markets.
So paying extra for audiobook access?
Yeah, catering to those super fans who consume a lot of audiobooks. And importantly, it extends to family plan sub-accounts too.
So the goal is clear. Keep users engaged longer across different formats.
And open up new ways to make money beyond just the standard music subscription. Drive engagement, expand monetization.
Okay, let's shift gears a bit and address some concerns. A big one seems to be the advertising business.
Right. That's definitely been a focus for analysts.
It only grew 5% year-on-year on a constant currency basis in Q2. In today's digital ad market, that feels slow.
It does seem slow on the surface, yeah.
So what's management's explanation? What's the plan there?
They've been pretty open about this. They're calling 2025 a transition year for ads.
Transitioning how?
They're basically building a whole new advertising tech stack from the ground up. That's a huge project.
Okay, so major internal work happening. That takes time.
Exactly. It's aimed at improving everything, targeting, measurement, the types of ads they can offer. They're seeing promising signs for 2026, especially in programmatic advertising.
Programmatic, so automated ad buying.
Right. Data-driven. They expect that to accelerate once the new tech stack is live. And here's a key detail often missed.
Yeah.
Their number of monthly active advertisers. That grew over 40% year over year.
40% increase in advertisers, but only 5% revenue growth. How does that work?
It suggests that while the revenue is lagging, because the tech isn't fully optimized yet, the interest and adoption from advertisers is actually really strong. They're getting advertisers onto the platform.
So the potential is there, building up, even if the dollars aren't fully flowing yet because of the tech rebuild?
That seems to be the argument, which leads to the question, Is the market focusing too much on the short-term revenue number during this rebuild?
And missing the underlying advertiser growth and long-term potential.
Potentially, yeah.
Yeah.
Something to consider.
Okay. So despite that ad concern and the headline loss, we also heard about strong free cash flow.
Very strong. 700 million in Q2 alone.
And over the last year.
2.8 billion over the last 12 months.
That's a lot of cash.
Yeah.
And the board upped the share buyback program to $2 billion.
They did.
What does that signal, especially alongside some of these other mixed signals?
It signals quite a bit of confidence, actually. That level of free cash flow gives them huge flexibility. They can keep investing heavily in AI, in content, without financial stress.
And the buyback.
That shows management feels the stock is undervalued. They're willing to put significant capital towards buying back their own shares, which is usually a sign they believe in the long-term value. It suggests the core engine is still generating substantial cash, regardless of quarterly bumps.
Right. And speaking of positive financial impacts, there was mention of regulatory changes helping them, specifically the Apple court case in the U.S.
Ah, yes, that was significant.
How did that help Spotify exactly?
So that ruling basically allowed developers like Spotify to offer alternative payment options within the iOS app, in the US at least.
Meaning they didn't have to use Apple's in-app purchase system.
Correct. Which meant they could bypass Apple's commission fees for those transactions. This directly improved their paid subscriber conversions because it removed a cost layer and maybe some friction for users.
Made it easier and cheaper to sign people up on iPhones.
Pretty much. And Spotify sees this kind of thing, these a la carte transactions, enabled by regulatory changes or their own payment systems as really important. They view it as a critical third revenue driver. You've got subscriptions, you've got advertising, and now this direct, maybe per item transaction ability.
Like buying an audiobook individually.
Yeah.
Or maybe tipping a podcaster.
Exactly. Those kinds of things. It opens up totally new ways to monetize beyond just the monthly subscription. It's a core part of their long-term strategy to diversify how they make money.
Okay, so bringing this all together, what does this mean for, someone listening? Maybe an investor, maybe just a curious user?
Well, I think the main takeaway is that despite those somewhat jarring Q2 headlines.
The loss, the revenue miss.
Right, which seem heavily influenced by external things like currency and those social charges, plus the ad tech transition. The core business looks pretty robust.
You mean the user growth, the engagement?
Exactly. Unparalleled user growth, the innovation in AI personalization, expand into video and audiobooks, plus that really strong free cash flow. It all points to a pretty resilient competitive moat.
And the suggestion is the current stock price might not fully reflect all that.
According to the analysis we looked at, yeah. There's an argument that the market might be overly focused on the short-term hits, potentially overlooking these stronger long-term fundamentals and strategic moves.
So this leads to a bigger question then.
Definitely. It makes you think, right? How will Spotify's focus, their stated focus on optimizing for lifetime value of a user rather than just hitting quarterly numbers?
Playing the long game.
Playing the long game. How will that, combined with this push towards a billion users and diversifying revenue through subscriptions, ads, and these new a la carte options, how will all that reshape the entire digital audio world over, say, the next 5 or 10 years?
Yeah. And what does that mean for how you listening might discover content, consume it, maybe even pay for it down the line?
Big questions. Definitely something to mull over.
Absolutely. A lot to chew on there. We really hope this deep dive gave you a clearer, maybe more nuanced picture of Spotify, where it stands now and where it might be heading.
Hope it was insightful.
And if you did find it insightful and you want to stay informed on other deep dives like this one, well, you know what to do.
Please consider subscribing to the channel.
Yeah, hit that subscribe button and definitely click the notification bell. That way you won't miss any future explorations.
Your support really does help us keep making these deep dives.
It absolutely does. Thanks for tuning in.